All right, let's get started. This is a post I did 2 months ago on June 12th. It's one of my Hall of Fame posts. And as you can see, it's called Is This Our Summer? And it showed the Russell from where it was at the time, pushing higher, cracking in a neckline, retracing, and then plunging to about 660. And it showed the S&P lifting higher, sloping down, and then cracking down to 1130. Where are we at? The Russell closed today at 650. Here's a zoom. So I did that post here, actually on here. This is when I did that post. Up, down, and then the S&P, we closed at around 1120. So again, the post was here, up and down. So not a perfect arc or anything, but pretty damn close. Now, when I did the post, I had projected that we'd stall in July, which was true. But the thing I didn't anticipate just how quickly this would happen, because I spoke about a weakening in August, accelerating in September, a big break in September or October. This all happened like 2 months in advance, down to about 1130 on the S&P. Well, we're there, and even more than that. So that all came true. That's nice. But now what? Well, interesting question. Let's look at a few things. First of all, looking at the ES, we can see that since just July 22nd, we have lost over a couple of hundred points on the ES, which is just astonishing. This support line was broken and retraced in short order, and the movement downward has been accelerating very rapidly. Looking at the NQ, bit of a similar story. The resistance was more of a straight line here, support, and we've been falling since July 26th. You may recall that back here, when we looked like we were breaking, when the chatter was 1400 on the S&P, I pointed out that this could well be a false breakout, just like the one prior to it had been a false breakout. And that indeed was the case, because it's really done nothing but melt. You can remember, it was only a couple of weeks ago, people were talking about Apple at $1,000 a share. Apple is $1 trillion company. Facebook valued at $100 billion. How quickly things change. Now, don't get me wrong. What do I wish for? Since that's all that counts, right? That's what God's listening for. For once in my life, I am Ben Bernanke's champion. Love him to pieces. I'll trim his beard for him if he wants. Because what I'd love to see is for him to take his one last bullet and come out with whatever QE3 is going to be and get this market rocking higher again. Because I have two themes for you. Theme one, if we can rally, and I mean big, like 15% from here, if we can rally, shorting and making money at those, I think, will be like shooting fish in a barrel with an Uzi. Point number two is, I am astonished and heartened and almost teary-eyed at how technically obedient the market is being right now. It is breathtaking. So let's back away from these intraday charts and look at some few long-term indexes. Wow, I'm just amazed to look at this stuff. Couple of quick ETFs here. The Cubes, just to point out, these were the lines I drew earlier about this false breakout, deteriorate, and this false breakout, deteriorate. This one more dramatically than the one before. What we really, really, really need to see is a rally back to, in this case, at least 53.50. These are words that haven't crossed my lips in years. I have no shorts on right. Oh, that sounds really bad. I don't have any short positions in my portfolio. I do have shorts on, but I have no short positions in my portfolio. Now, what if the market crashes tomorrow? Well, tough titties for me. I mean, here's the dog. He's barking. Sorry. You know, it to me it is illogical. The risk reward doesn't make sense right now for me to remain short. I covered the last of my shorts today. I have two rather small long positions. I mean, I usually talk about my commitment level being 50%, 70%, 90%. It's honestly like 6%. It's almost inconsequential. This will be an unfamiliar feeling for me because I won't be worrying about / losing sleep over anything the market's doing for a little while because I'm basically in cash at this point. I've got some XLI and some IWM, and that's it. Speaking of XLI, let's take a peek at that. This is an ETF for the Industrial Select Spider Fund, and I remember this snarky little comment not too long ago, probably a couple of weeks ago, about Head and Shoulders don't work. Well, yeah, they do. They work great if you know how to spot them. So this is a pretty good example. This isn't a perfect Head and Shoulders, but it's a good one, and it works sensationally. I would also point out these Fibonacci retracements is really terrific. This one spans naturally the bottom to the top as it should, and part of my basis for buying this today was it reaching that level. So obviously the clean trade here would be a retracement to either here or, if there's a really strong rally, as far as up here. Chart after chart after chart after chart after chart after chart after chart that I look at looks basically exactly like this. If we get a big rally to the breakdown level, as I said, it's going to be like shooting fish in a barrel. I have 250 stocks that I would love to short at the right price. It's going to be a while. I don't know if it's going to be measured in weeks or months, but they're all gorgeous and they're all so not ready to short right now. I'm avoiding them. Let's look at a few index charts. Here's the Nasdaq Composite. Very nice technically. The bit of sloppiness breaking these trend lines and retracing. But I mean, in retrospect, it broke this one and retraced rather cleanly up here. This was the whole, Greek Parliament nonsense. I mean, in retrospect, that was like the time to short. It's always kind of ironic how these things work out. After the Greek bailout, in big quotes, that was the time to short everything with a ticker symbol because everything is lower now. But yeah, that's composite. And here again, we want to see a retracement back. And this is a ways away. This is I don't have my calculator handy, but this is like 12, 13. This is like 15% of a rally here. So could be money to be made on the upside. China via CZH. Nice touch of the Fibonacci fan line here. Dollar HUI. Now let me tip my hat to you gold guys out there. The only nasty spot for me today was that I came into the day with my biggest short being GLD, and obviously I lost on that. Got out relatively quickly because there was really no technical basis to hang on to the position. This analog here is fascinating to me. I believe that we are approximately here, very close to here with respect to the analog. That is June of 2008. And recalling June of 2008, that was was a couple of months till the things really started getting bad. But I'm watching this analog closely because if assets, and including gold and so forth, can rally heartily here in the next month or two, we'll just continue to map this analog right up to this area, which is July of 2008, which is really the day all hell began cracking loose from its box. So worth watching, definitely worth watching. Dollar Indu. Now I pointed out more than once the Fibonacci time series. A gentleman wrote, said I might have gotten this a day off, so I nudged it forward one day, which would mean today is actually the peg on that one. It's not something I base a lot of trading decisions on, but I find it intriguing that the time series worked out this way. Here again, The break point on the Dow is like 11,555. We would need to see a good 800 point rally to push it back up again. I'm just going through indexes now. I've got no stocks to talk about. I mean, I'm really uninterested in individual stocks right now. I'm just kind of looking at the market as a whole. The mid cap is a particularly fascinating one because this former support level is now extremely formidable resistance. And so when the mid caps push this back to 920 or so, everyone's standing out of my way because I'm shorting everything. God, please let us have a rally. I mean, I've never been so eager to be bullish in my life. It's not particularly interesting. The Fibonacci's are a little interesting on that one, the dollar MSH. Here's the NASDAQ 100, dollar NDX. Very pretty here. A couple of horizontal lines. This one was the, some might call this an inverted head and shoulders. I personally don't really call patterns this big and at top of markets inverted head and shoulders, but I can see what they're talking about. This would be the neckline of the aforementioned pattern, which neckline was fully retraced today. So kind of interesting there. Now, probably the most interesting of all, the Russell 2000. This thing has gotten just killed. I mean, it's gone from 860 to 650. What is that? 20%? It's a lot. That's a big number. And check out the Fibonacci arcs on this one, right down to that. In this case, this is a bit of support at this level. Really fascinating graph. The big kahuna here, S&P 500, dollar SPX. Here we have again 1227. Pretty meaningful resistance there, and just above that is 1249. I would get terribly interested in shorting again if we got up to the 1250 area. That's kind of how far we need to go. Another fascinating graph here. Back to the technical obedience bit. The transports. Look at this. These fan lines spanning back to 1932. Beautiful collapse down to this fan line, which, as we can see, has offered a form of pretty meaningful support. And I hope it does that again. The utilities isn't something we look at a lot, but this is a really interesting pattern here. Look at this. Look at this broken wedge right here. It just snapped right beneath that. And I'm sorry to be a broken record here, but let's push this back to about 420 or so. Let's see that rally back to that level. It all lines up. I mean, everything points to what we've seen here as being just a prequel. And then dollar XBD. This is the Security Broker Dealer Index. More of an unusual support here, the trend line. Yet again, let's retrace this to almost 100 to see things get interesting. One other thing that speaks to the notion that maybe we're kind of like out of downside is the VIX. We're back to May 2010 levels here. I mean, that really sticks out. We're in the neighborhood now of this uber insanity we had. And also dollar TNX, the interest rates, we are at such low levels here. The bonds are just sky high. So I will close with this thought. Thinking back again to 2008, we had an initial scare back in the springtime. This was, I guess, the Bear Stearns collapse. And so the market fell hard, everyone was scared, and there's all sorts of gnashing of teeth, and then it rallied. And May 2008 was pretty much the end of that, and then we had this drop, and then Lehman, and then really it got horrible. I'm thinking we're kind of going through that now. Tomorrow, that is Tuesday, all eyes are on me on FOMC. Everybody wants Bernanke to save them again. I, for one, agree. Go, Ben, go. I really want to see that happen for all the reasons I've just cited. So, bottom line for me, I'm pretty much out of the market. I've got two small long positions. If the market collapses tomorrow, a small tear will run down my face, but I need to be true to my charts. I can't just guess wildly what's going to happen next. I mean, there has to be some integrity to technical analysis here. And my analysis tells me that at some point soon, we're going to rally, hopefully rally hard, and then it's time to short with both hands. And with that, I bid you good night.